As every empire rises, so too shall they fall. This was the case with the Roman Empire. This was the case with many empires. Great Britain, that was all over the world, ruled the world pretty much. And so is the case that we're hearing and that we're seeing, listening to the talk of the failure of the potential fall of the US dollar as a global currency. Will this happen? China, Russia, India, South Africa, moving forth with their trading currency agreement that they formed in 2016, drawing in other countries into this bloc. Will this be a defeat for the dollar? The dollar was taken off of the gold standard and adapted to the Saudi Arabian oil. It was adopted to oil, trading. It was an agreement where Saudi Arabia said that they were going to only accept their payments in US dollar. Now that we see that's changing, we see that they're accepting a number of different currencies, including China, Russia, South Africa, and a number of other different currencies. What will that do to the US dollar? What is the US dollar? Fiat currency, paper currency. Is it valued with anything? Russia, China, India, they're saying South Africa, there's talk that they're going to be putting their currency and having it backed by different commodities, gold standard as one of them. What will that do? If you want to hear more about this and other things, where I see that our US global economy is going, where I see the dollar going, where I see imminent trades going in indexes, NAS 100, NASDAQ, the S&P. Hit subscribe, link up, and listen to what we're about to give you, the jewels that we're going to offer you in today's show. Hi guys, welcome to Dragonless Trading by Oliver Kelman. We're going to go ahead and discuss what I believe is going to happen in the markets this week, but also get into a little bit about the mindset that we have, what we should prepare for. There are a number of folks that are discussing and talking about the default and the fall of the US dollar, that there's a recession that's going to be happening, that just a whole bunch of fundamental news. So what can we do to prepare for this? I'm going to go ahead, if you guys can see this video that I have here, I'm going to go ahead and play it. And this is an economic crisis. Gentleman by the name of Ray Dalio. He's warning of a bank collapse, US dollar, and upcoming recession.
And so they don't have enough money, so their government has to print that money. So that creation of all of that debt and its financial implications and its economic implications is one force. The second force is the internal conflict, the amount of conflict that's internally, largely due to the largest wealth gaps that we've had since the 30s. And that produces populism of the left and the right, particularly when there are financial difficulties. The third force is the rising power, the challenging the existing power, largely in the form of China and to some extent Russia. So let's call it the great power conflict, because in 1945, there's this cycle. You have a war, then after a war, you have winners, and the winners determine the rules of the game. And then there's this evolution of others becoming more competitive, and then you have a conflict again for who's in control. So we have that dynamic taking place. So those three influences, the financial.
So we see here, there are a number of individuals, even President Trump, a lot of people talking about what we're going to be facing, the global collapse, the US dollar. And then we also see that there's a huge move that's been going on right now between various countries, central banks that are having a move towards a digital currency. you know, IMF, just every major company. But what he's discussing is actually, you know, is accurate, and it's something that I've been talking about for the past several months. Actually, I've known that this was going to be happening in the past couple of years. I actually moved all of my money out of the U.S. dollar. I put it into digital currency, and really moving towards trying to have your own control, become your own bank. So these are some of the things that we should prepare for. And I'm telling people, I always say, listen, guys, if you don't have, if you're not going to have about a good 10, $11 million saved away, how are you truly going to survive what's going to occur? A bank collapses, you can't get a hold of your money. What do you do? Right now, we see that banks can go ahead and seize your money, not give you access to your own currency for, you know, months at a time. You're not even able to pay your rent. You can't pay your mortgage. You can't buy food. You can't do anything. And they're being allowed to do this. Is this fair? No, it's not. We have where we see that even crypto exchanges now they're following the same trait that you go ahead and you put your money in, and they're telling you that you can go ahead and trade your money because maybe they want you to lose it, but you can't withdraw it. So many people utilize crypto exchanges as their own banks. They're not trying to trade, even though they have that option to. So should they be forced to do that? What's happening if your money is in a bank and you can't get a hold of it? You can't utilize it. Well, the bank is using it. And what's happening if you can't take your money out of a crypto exchange? Well, the crypto exchange is leveraging your own money. So we need to go ahead and prepare to see how we are going to engage and work within this new digital world that we're embarking into, this land of Web3, blockchain, everything. We even see artificial intelligence. A lot of people are discussing that. So when we're talking about digital currency, artificial intelligence, the metaverse, we need to look and understand that this is a whole technical apocalypse that's going to be occurring. And so I wanted us to go ahead and listen to this gentleman. Let's look up here, confronting Peter Schiff and the upcoming economic collapse.
Welcome back to another episode of the Meet Kevin Show. Today, we have the honor of coming to you from inside Peter Schiff's home in Dorado, Puerto Rico. Peter, thank you so much for inviting me into your home.
Oh, Kevin, it's great to finally meet you
Absolutely.
in person.
Yes, away from the Zoom screen. So, Peter, everybody wants to know your take. You've regularly said, and you've warned about this, that once the inflation genie is out of the bottle, it's not going back in. Where are we now that it seems like inflation has somewhat peaked and at least we're trending down? Even though it may take longer, it seems like we're not going to the 70s again. What say you?
No, I think we're just starting a decade that is actually going to be worse than the 70s from the standpoint of how bad inflation is. And in fact, last year, if you measured prices the way they measured them in the 1970s, the inflation that we experienced in prices in 2022 was actually worse than any year of the 1970s. In fact, it was worse than 1980 or 81. So we're already off to a really bad start. But you have to understand that the inflation of the 1970s, those seeds were planted mainly in the 1960s.
With the price caps.
Not the price caps. That was kind of the first attempt to kind of attack the symptoms of inflation. Because remember, inflation is a very misunderstood word. Right? People think it means rising prices. It doesn't. Right? If you get an old dictionary, an old Webster's dictionary, it doesn't even have to be that old. In the 1970s, even 1980s. And you look up the word inflation, and it says to expand, expansion of the money supply, expansion of the supply of money and credit. A result of inflation is that prices go up. But the government.
So what he's talking about is inflation here. And as we know that the Fed Reserve has been increasing interest rates because they want to bring down inflation. Well, why do we have inflation? Well, because the central bank, the Fed Reserve, the U.S. government, and many governments, as a matter of fact, have just been printing money. There's nothing backing that. You know, they're just creating money. And when you have an excess of dollars out there with nothing backing it up, then inflation is going to go up. And so in order to get a hold of inflation, we need to have a recession. We need to have disruption. And that's why they've been increasing the interest rate hikes. In order to get inflation down, they have to increase interest rate hikes. In order for inflation to come down, we need to have unemployment. We need to have a disarray, a disruption within the whole economic marketplace. And so that's what we're seeing now. But with where we are going, that's still that just funneling out of dollars and dollars and dollars and dollars. That's one of the main components that we're going to see, we're seeing that's really going to cause havoc, not only to the US dollar, but also the major currencies around the world. Let me go ahead and add this here as well. We're seeing here, there are numbers. So I want you to see, a lot of people have been seeing that there's marks and individuals, they've been hearing a lot about this banking crisis, the collapse of the dollar. And I wanted you guys to see, it's a number of different people, even some of our renowned economic advisors and folks that are leaders within their own industry. Yet President Trump, even as I said before, talking about it. President Biden sent out an executive order where he wants the Federal Reserve and the U.S. government to start also looking at digital currencies. And I sent you in our own chat, some of you saw, where we should be expecting that if we go to digital currency, that's just the main way for the government to have more control over what we do, access to see how we're spending our money, and even stop us from purchasing certain things. So it's a really infringement upon our freedoms, our global freedoms. But let's take a look at what these guys are saying.
The Balaji sense that all of this is just going to keep going, and we've reached some sort of threshold moment that requires us to put the bit signal into the sky, as he said. How contained is this? What happened with SVB? Is this going to go on? Are we at a tipping point? Like, help me understand this moment.
It would be very difficult for me to tell you whether or not we've reached a tipping point. I think you can only evaluate that in retrospect. But I would say, everything we've talked about in my first 2 appearances on the show, we're seeing that play out. Fractional reserve banking is a scam. It always fails. It cannot continue to support the depositor's interest over time. And we had Balaji on for a Twitter space. I think it got attended by like 500,000 people.
Jesus.
And he, for those that don't know, he accepted a bet that Bitcoin would reach $1 million USD price in the next 90 days.
Which we're still in the middle of, so we'll see.
We're 20 days in, maybe 30 days in, something like that at this point. And although that's a very aggressive timetable in my estimation, I do think directionally he is correct, right? That same thing we've been talking about previously. The more currency you counterfeit, the more Bitcoin's price appreciates, right? You're pricing Bitcoin in terms of something.
You use the word counterfeit. So really, let me give people like a 20-second primer on some of the things you've thrown out here. So
I can give them the 6-word thing.
Oh,
yes, go ahead.
Do it.
Inflation is legal counterfeiting. Counterfeiting is criminal inflation. So central banking is a coordinated currency counterfeiting cartel that runs the world.
All right. One of the questions I want to ask you today.
So that's very important to understand. We talk about the whole dollar. We talk about the creation. As a matter of fact, when we look at even who founded the Federal Reserve, a secret meeting, where you had individuals, U.S. Treasury, you had some of the leading bankers, banking families, financial institutions that created the dollar, put it on the Federal Reserve, basically a paper currency that does not hold any value, just so that it's a huge scam, just so that they can go ahead and print and control. So yeah, it's corruption, it's a scam. And then now we have a digital currency. Now we have the government that's saying, hey, we want to go ahead and create a main currency that we can control everybody. But that goes against the whole blockchain. That goes against the whole creation of cryptocurrency. Anybody should be able to create their own dollar. And if it has a particular value, then it's an interchanging, It's similar to when individuals, back in the cavemen, if you had fruit and you wanted to get your house built, but you didn't know how to build a house, then you could go ahead and pay in food those people who can go ahead and do this. What is that called? That's called commodity trading. Okay. And so now we're here and we're creating this whole structure that's with the Federal Reserve and central banks that's just been a ploy to truly enslave people working, and then putting in their dollars, their money in a banking system that keeps it from them. When you want to go ahead and take out a loan, then they charge you for that, yet they're trading and making money off of your own money. And when you want to take your money out, they stop you from taking it out. Okay. So what we're looking here is to sort of pull people out of this matrix of enslavement, pull people out to understand that now is the time that they can fight the system, fight this financial monetary system, and actually achieve success for yourself. And so this is what we're looking to do here. This is what we have been doing. We went into countries such as Egypt, teaching them how to invest, trade. We supported various revolutions through Africa and North Africa and the Arab world. And we're doing that every single day. We're putting our money where our mouths are. We're putting our effort. We're putting our safety to go ahead and educate and enlighten people and you guys on what to do. So what we're going to do now, I'm going to go ahead and switch from the YouTube. We're going to go ahead and take a look at the markets. A lot of you guys know that what I love to trade, what I invest in is digital currency. My long-term investments are digital currency. What I short-term trade, day trade, are indexes. I am the, it's like I'm playing an NBA professional game. Why indexes? Because it has more volatility. You could make more money trading indexes. You can lose more money too, which is why, I always tell people if they're learning to trade, if they're learning to invest, then understand that you need to have a good several years underneath your belt in order to consistently be making money. And what that teaches you also is just teaching you how to psychologically trade, because it's not only understanding your technical analysis, but it's understanding how to detach your emotion from the actual investment or the trade that you're in, how to know when to cut your loss. Okay, so the S&P is the top 500 stocks trading on the New York Stock Exchange, okay? And pretty much the S&P holds the direction that the market is going into. And mostly you'll see that the S&P, all the indexes are possibly trading the same, but sometimes they detract. So when I'm looking at digital currency, I like to look and see what the S&P and also the NASDAQ are doing, all right? And this happens to be the S&P. And what I'm looking at is I'm looking at various different time frames when I'm trading. I'm trading on the 5-minute, but mostly because I'm in and out. I'm sniper trading, but I'm also looking at what's going on in the 15-minute, the 1 hour, the 5 hour, the daily, and the weekly. And so for us to understand pretty much where the market is truly going, we look at the larger time frames. And so let's take a look at the daily, okay, and the 5 hour. Why the 5 hour? Because the market is usually trading on the 5 hour, okay? And so each of these here, we call these things candlesticks. Each of these green lines and red lines are candlesticks. And because we're on the 5 hour trading, each of these candlesticks represents 5 hours, okay? Such as in here, each of these candlesticks, this is the daily, they represent a day. So each of these green and red candlesticks represent a day, the open of the day and the close of the day. And then here's the weekly. I love to see, really, I'm looking at the weekly to see what's going on long-term in the marketplace. So as we see on the S&P, the market's been going up, the market has been going down, the market's been going up, the market's been going down. But when I look at the weekly here, I see nothing is really happening. It's just truly been consolidated. What do I want to see for me to understand if the market is going to go up or if it's going to go down? Well, I want to see it break not only above this resistance line that I have here, but I want to see here that it breaks above my linear regression line. This line that's coming down here is my linear regression line. And on the weekly, even on the daily here and on the 5 hour, while it's going up, on the weekly though, I see that it's going down. It's trending down. Okay. And so here on the S&P, it's just been here. It's hitting up against this resistance. It's been hitting up here from November 14th of 2022. When is this? This is May 30th of 2022. We see it came down here, but it's been just bubbling up here. And then we look, it came down here, it hit the bottom of that linear regression line to the dollar. And what happened? It went right back into this consolidation. So I'm going to look for it. If it could break above here on the weekly, I look for it to come here, but then for it to retest, and it's going down, and it retests the low of my linear regression line, and it's going down. That's why I think the market is not going to be going up anytime soon, because of everything that we're hearing with the dollar, with the war that's going on with Russia and Ukraine, with all of these countries now moving and trying to create their own system to devalue the currency. As you heard within the videos that we were watching, China, their big move to be an economic leader. And so what do? They have to devalue the dollar. And so, you know, partnerships and agreements with China and Russia and India, Venezuela, Argentina, South Africa, all these different moves, it's going to go ahead to take away from the US dollar. But what we should understand is this: it's not going to be a currency that's coming out there in the form of a fiat currency as we know it as of today. It's going to be digital. Why? The world is going digital. Let's take a look and see the NASDAQ. What is the NASDAQ? Here we see the NASDAQ, okay? Again, so the NASDAQ is the top 100 tech stocks trading on the NASDAQ. I like to say that Bitcoin is like a tech stock. Cryptos are like a tech stock because they're digital assets. And so they're moving along. Many times when I'm looking at crypto, it's moving similar to the NASDAQ, okay? Tech stocks, all right? So let's look here and see, as I told you, okay? Here we see on the shorter time frames that I'm really trading because I'm a sniper trader. I get in and out. It's going up, it's going down, it's going up, it's going down. That's why many times, guys, when you see, and I'm posting what we've done on our different accounts and everything, I see that I show you that I'm in buys and then I'm in sells. I'm in buys, I'm in sells. And if I'm getting, and I get hit at a negative, then you see that I'll stop. I'll switch my assessment if I take a loss on the buy, and I'll take it. I'll wait here. So here I may be in for a buy, but I'm looking at it. It comes back up here. I'm looking to now close out. It's already selling before I close out, so I take out on a loss. I close it at a loss. Why? Because I see that it's rejected the top of this linear regression line. It's rejected my resistance level. Now what I'm doing is I have what you call exponential moving averages and short EMAs. And these are different levels. So I have this white exponential moving average, which is my 9-day exponential moving average. The red one is my 13-day exponential moving average. And what I'm looking for is to see if now the cells can go ahead and break below there. Okay, and if it breaks below there, then I'm going to go ahead and see it's broken below this resistance level here that I drew here. And now I'm going to look to trade. I see here also my different levels. I have these pink lines. These are called Bollinger Bands. This top Bollinger Band is telling me that if it gets up here, it's oversold. And as we see here, it's getting up here. And so this is really telling me the top linear regression line, I should close out. The top Bollinger Band, I should start closing out because it's telling me that it's oversold, okay? And I see that it's broken back down here and it's breaking below this middle Bollinger Band, and I'm looking for it now and I'm getting in and out of trades, entering and closing to these different levels. That's how I'm making my money. I'm not holding it for a long time where it's going to go and then come back against me and I'm going to get out at a loss. I'm getting in and I'm getting out. Couple pips, and we call these little movements here pips. So a little pip here, a little pip there for me, you know, $5, $10, $100, $200, $1,000, $3,000, $10,000, $15,000, depending upon my account size, depending upon my lot size. This is giving me a bit of money. So if I have $1,000 in my account, if I have $500 in my account, and I'm getting in and out at $5, $10 a pip, $5, $10 a trade, and I've done 100 trades in a day, that's great. That's fantastic. And I'm looking to do that. On an account size like $500, if I can get $10 every trade, that's fantastic for me. $10, let's say $100 at the end of the day, that's $1,000, right? If I go ahead and I'm just doing 20 trades, okay, then that's a good amount of money for me as well. So this is how I'm trading, guys. And look here, now I'm going to stop here. I'm going to see whether we go back up here. This line here, this is what my orange line, reddish orange line here. This is an 800-day EMA. And so I see that's come down here. And then I'm looking now, this is a heavy resistance, okay? So now we're going here and I'll catch my trades. Now, if it stops here and it's moving here, I'm not going to do anything. Why? Because it's barcoded, okay? I don't want to get caught up. And let's go ahead and move this here. I don't want to get caught up into any of that chop. I want to see here that it breaks outside of this level. Oh, anyway, I don't know how. I want to make sure it breaks outside of this particular level here, okay? So now I'm looking for it to break below this area here. And if it could break below, and you see when I go back here, I don't know why it's not doing it, but when it goes back here, I see that this is where it stopped. It stopped here. It wicked down and came back up, wicked down, came back up. And this green line is my 50 EMA, okay? So I'm going to look for it to break below this area here. And then I could go ahead and ride some more sells down here. But it did not do that. That's why I said I'm not going to get caught there. I'm going to wait. I'm going to wait and see if it comes up here. And I'm still not going to trade here because it's not a gradual trend line move up. And it's not a gradual trend line move down, okay? So this is areas that is, I want to be a safe trader. So it's not areas that I would really trade in. I want to have a nice trend. I look on the 15-minute. And remember, I'm trading this 5-minute. I'm looking at also the 15-minute. 15 minutes is showing out even nicely because here it's riding my white EMA, okay? This is now a support for me. So whenever it comes back down here, I'm to enter a long, enter a buy, and ride it up and get out. And if it comes back down here, I'm going to ride it, I'm going to go in along again. So I'm doing this all the time. And then until I see this red line, or I see this move here, which is a pin bar candle. So these are all things that I'm going to teach you. This is the Japanese. When you look and you read the type of candlesticks that these are, this is known as the Japanese candlestick interpretation. So here I would see here, hey, this may be going down. And this is a red candle. And this here, little thing here with a little body, this red candle, you call it a doji. So here I'm still waiting. I'm not getting into any sells or buys. But if I see it coming up, I'm going to jump in for a buy, get out right away. And I see if it comes back down here, I'm going to get it for a buy and just ride these bad boys up until I see a change of trend line direction where it's coming down here. But here, remember, it's barcoding for me. It's in consolidation. I'm not trading any of this. I'm going to wait to see if it breaks below there because here is a heavy resistance, okay? And also the top of my linear regression line, but on the 15-minute, it's not going up. It's not trending up. It's not trending down. It's sideways. So right now it's consolidating. I don't want to get involved in that chop at all. Okay. What's happening in the NASDAQ? Do I think long-term here? Right now here, it could be anything. Okay. Right now here, I'm at the middle consolidation of my linear regression line that's going up. It could either go up or it can go down. Okay. So It's consolidating. I'm not going to do anything. I'm not entering into any trade. I want to see what happens right now. Okay. Because this still has room for buys to come up here, where then this is telling me short. This arrow going down is telling me to close my entry order long. But here, when I'm looking at the weekly, I see we're almost there. And if it hits there, then I'm going to be looking for more likely than not for now it to start coming back down here. So I see NASDAQ here, it can get into a little bit more buys. We can go, but I'm looking to prepare for us to go short. And so if I'm looking for that from the NASDAQ, I'm looking for that from crypto. I'm looking for that from Bitcoin, Ethereum, XRP, all crypto assets that are going to follow Bitcoin, and Bitcoin following the NASDAQ and the S&P. So that's where I'm seeing that the market is going. I still see that we could have a little bit of upside, but because everything that's going on, I expect that the market really can go down. I expect that it should go down, but I'm not going to, that's my speculation, but I'm going to wait. I'm not going to jump the gun. I'm going to wait to see exactly how much higher we can go. So that's our market. That's my speculation for where we're going. That's where I'm talking about. I'm always going to tell you what I think that we should prepare for tomorrow, prepare to save our finances, also to set ourselves up financially, day trading as well as investments. I try to tell people, if you can, do it both. You want a long-term invest. By the way, so we're day trading, we're going in, we're going in, we're going in. But when we get that down, when we go all the way down, let's see on the NASDAQ. If we get, and you see this line here, if I can get all the way down here on the NASDAQ, I'm buying in heavy. I'm just going to go in, which means I'm going in heavy on my cryptos. Bitcoin right now, it hit around 31,000. That was heavy resistance. Now it's down around 27, going towards 26. It's a strong support area. If it can't hold there, it's going down. But if it gets down to around that 10,000, 13,000 to $10,000 area, that's a great area buy-in. If it even goes down further, that's a great area buy-in. Why? Where was Bitcoin about a year ago, year and a half ago? Bitcoin, I think, at the all-time high was around 69,000, almost 70K. So if I could put money in Bitcoin, if it's at $10,000, and I know that it's going to retest that support, that resistance, and even go higher, then I'm getting a 70% return on my money, right? And that's Bitcoin. I am investing in a number of other altcoins that have a better ROI, a better return on my investment, okay? That will give me even a better return than Bitcoin, okay? Maybe Ethereum, maybe XRP, maybe something like Shiba Inu, maybe Cardano. It does not matter. If I'm looking and I'm seeing where it was at its all-time high, and where it's going at the bottom before it pivots and truly starts to skyrocket, that's my long-term investment, guys, okay? So right now, I'm watching my long-term investment to see when I'm going in heavy, but I'm day trading. I'm getting in my day trades, whether it's going, I don't care if it's going up. I don't care if it's going down. I don't care if it's going up. I don't care if it's going down. As long as I can identify the trend of upward motion or downward motion, I'm making money. All right? If you want and you like what you heard, please hit subscribe to our channel. We're going to be actually going live starting, if not next week. I think we wanted to get to 100, but I'm going to call it out. If we can get to 50, we have 47 subscribers now. If we get 3 more subscribers, if you can give that to me this week, we'll start our first live sessions this week. All right?
Thank you, Oliver.
Thank you.
Thank you, guys.
Bye.
Have a good week.
Thank you,
You-
brother.
Bye.